Good afternoon, everybody. This is going to be my weekly analysis on EU. Um, it's going to be a little bit different this week. We're going to talk about because I think the weekly analysis for me personally, it's pretty clear. So I'll get into that. But I think what I'm going to talk about is we'll talk about this trade. I mean, this trade idea. I didn't actually take this, but to be honest with you, if I was trading, which I wasn't last week, I would have taken this. So I would have taken a loss. But more important than the loss, let's talk about what the benefits of taking a loss, because it's quite important. Because I think, for me personally, this last year I've made a lot of progress with trading and understanding the strategy, understanding the range cycle, and a lot of that has come from taking these losses. Not just taking the loss and then just go delete that and then on to the next trade and never really learn anything. I think just taking the loss and then understanding, like, let's actually go into the charts and understand why this loss, why you took this loss, why was I bearish expecting this low to get taken when I should have been bullish. I should have been bullish overall. So, and I think a lot of people just see the loss and then just ignore it or delete it or forget about it and never really learn from it. But it's a lot of my progress has come from this, and especially if you're learning to trade and you're new to trading, you should be taking you have to have like a framework of what you're looking for. So for me it's ranges. I trade ranges. So if this is my range from here to here, and I believe this to be my, not just take any old loss, not just take a buy and then take a loss and figure out why it lost, but if you have the understanding of what you're looking for, for me, like I say, for me it's ranges. So if I believe this to be my range from here to here, and I take this loss, and I take this trade to go short, and I take the loss, it's going to help me sort of understand, to look at it and go, well, why was I looking at this bearish range when I should have been looking at this bullish range. And for me, if you're just starting out, you should be taking loads of trades. You should be taking everything that's look at this as a strong high, weak low. You take that without hesitation. You should be taking this on the 5 minute, on every time frame. Every time frame you see a range like this, any time frame, 1 minute, 5 minute, 2 minute, whatever. Every time you see a range, you take the trade. Now I don't mean take the trade as in do a challenge and then risk 1% or 0.5% on the trade. I mean take the trade, like demo, paper trade, whatever, £10 risk, £1 risk, it doesn't matter, whatever it is, just take the trade, and then if it loses, figure out why it lost. So for example, this trade, I was bearish, expecting this to get taken, and then this to get tapped, which it did, and then pushed down, and looking for it to come and take this low. But ultimately I was wrong. So I had the bias wrong. And why did I have the bias wrong? Well, it's pretty straightforward. I mean, the answer is normally always the higher time frames. So, I've talked about this range a lot, from this low on the monthly to this high, and we tapped into this unmitigated imbalance fill price action. So this unmitigated monthly block, we tapped in to this block, and then we got let's go to the daily. So we tapped into this block. We tapped into this block here, and you might be thinking, okay, we've just tapped into this unmitigated block, and we've only just tapped it, and then we've started driving up. So you could be thinking, that this could be an inducement that we push down. But the rules of the range is that if we're bearish to continue going lower, then no strong high should get broken. So look, we have a run of liquidity, and then we have a breaker structure right here. So we have a strong high, and then we have a weak low. And this, if we were going to continue bearish, this should have held. This high here should have held, but it didn't. It broke. So we broke structure. So now, coming from this higher time frame POI, we have a strong low, we have a weak high. So let's just drop down a little bit lower so we can see a bit more detail inside of here. So one sec, let me just line this up. Yeah, so you can see this is the range. This is the range. Look, strong low, weak high. This is all internal range liquidity, and then price came and took internal into this imbalance fill price action, and then we pushed up and we took external range liquidity. So what I'm saying is that's why you trust that this tap into the unmitigated wick or the unmitigated block is enough, because we broke structure on the higher time frames, and we shouldn't have broke structure if we were going to continue bearish, but we did. So now we've created a new range. Because look, what if we come out of, look, strong high, weak low, internal range liquidity, and then push, we took out internal, and then we came and took external. So now a new range is created. So look, we came into here, we ran liquidity here, and then we broke structure. We created a range from strong low to weak high. Price took internal into this daily unmitigated block, and then we pushed up. So you can take longs from here. I can't quite remember what my point was, to be honest. But yeah, so sorry, I'm with you now. So what I was talking about was why these shorts didn't play out. Why was I bearish when I should have been bullish? Well, let's go to the daily. Now this would have been confusing. I'll be honest with you, this would have been confusing, because you would have been looking at this thinking strong low, run of liquidity, break of structure, run of liquidity, break of structure. So you would have been looking at this thinking, okay, now we can start to get a push down. We can start to take shorts from here to come and take this and maybe fill something down here. But I think what happened with all the tariffs, the dollar was so weak that it didn't need to come down here. It just kept pushing. So that could have, I can't remember if I took a trade in here or not to go short, but if I did, I think it would have been worth a shot. It would have been a valid setup for me to go short, and yeah, it would have been a loss, but I would have been okay with that, because it would have made sense. So yeah, the reason that I should have been bullish rather than bearish is because the higher time frame, the date on the weekly time frame or the monthly time frame, this was the high. So once we tapped this and we broke structure, this was always the target. So me going short in here is just me expecting price to get a deeper pullback, but price didn't have to do that because this was the target overall. So yeah, that is why I lost that trade, and that is why, you know, this range played out. Strong low, weak high, unmitigated. This is a 6 hour block, but unmitigated block, push up, external, not only external of this, but external of this. So, you know, and if you had that view and you trusted the range cycle, you know, you trusted that these strong highs would hold. Look, strong low, weak high. Look at the entries you could have got. You know, if you were bullish from this low to this high, you know, we took out internal range liquidity. You know, we pushed up, we broke structure, so now we're dealing with this range from this low to this high. You know, we took out internal range liquidity, first long, So you could have longed this, and then what happened? Price had made this inducement, came down, took out the inducement, respected this strong low, second long, and then what happened? We create a range. Look, run of liquidity, break of structure, strong low, and then we had a run of liquidity, and then a break, or you could say this, bigger break of structure, weak high. You know what happened? We took out this internal range liquidity here, tapped into this unmitigated block, pushed up, took external. So this is your third long. So you can long this, you can long from here, and you can long from here if you were bullish. And all these strong lows, they all held. But yeah, just at that point, I saw it differently. You know, it's the market's never wrong. It's just that I failed to see something, or I failed to trust something. So, but anyway, like I was saying, it's really important to look at your losses, look at your wins, look at why you lost, look at why you won, look at what you got right, and look at what you got wrong. But you have to come at it like understanding the strategy. Like me, for example, if you trade the range, you know, understand the range. You know, this looked like a perfect range, and I would have definitely taken this. This looks like a perfect bearish range. You know, we have the high, we have the low, we have the inducement, we have the unmitigated wick. It made sense at that time for me to come and take this out, but ultimately I was in the wrong direction. But everything looked perfect, but obviously I was in the wrong direction. But then you could say the same about this. Like, this is the range from this low to this high. This was internal. We pushed up, we broke structure, created these ranges, and now, you know, we took out internal. So now we're coming for external. But it all comes from the higher time frame bias. And yeah, like I was saying, if you're learning this, you know, if you're learning this from new, you want to be taking loads of these trades. You want to take every range, but not just taking every single range for the sake of it. You know, you want to take every single range to build up the experience and the confidence. And you know, when you do lose, you know, you learn from it. You look at it, and so you like say for example, you look at this range that I took on here, and then it loses, and you look at it and you see why did it push up instead of pushing down? Why did we take this high instead of taking external? And you know, the answer is normally in the higher time frames. So I know it's a bit of a rant, but I think it's quite important. You know, it's a good example of how you learn, not just going through the charts and back testing a load of crap. You know, take the trade and learn. You don't like I said, don't take the trade and risk the house on it. Just take the trade and risk minimal. You know, even demo if you want. You know, just take the trade and build the data up, build the back testing data up, or sorry, the data, so that you have a catalog of ranges that worked, ranges that didn't work. You know, and yeah, it's just about putting the work in, really. And if you want it, you'll do it, and if you don't, then you won't. So yeah, just a little rant from me, but I think it's really important, and it's yeah. So my plan for EU this week is 1 second. My plan for EU this week. Now we've just taken out external range liquidity. So we've just taken out external range liquidity. I'm going to delete all of this. Actually, let's not delete all of this. Let's talk about this other trade that I talked about. So this one, I know it's going to be a bit of a longer video, it's a bit of a, but I think this is important, so I'm going to go over it. So this one, you know, I called before I took the trade, and it went on and lost. This one I called before I took the trade, and it went on and won. So, and this one won because I was in the overall higher time frame direction, you know, which was bullish to come and take out this highs. The reason I took this is because I was expecting a deeper pullback, but that was me thinking. That wasn't, you know, I wasn't trading what I saw. I was trading what I thought. I thought we were going to get a deeper pullback from there, but obviously we didn't. But this one went on and won, and hit TP. And now I called this one before as well. It's in a few videos back. It was another EU trade idea. So if you're interested, go and watch that, and you can see how I broke this down before I before I would have got triggered into this trade. So yeah, I talked about my entry, talked about my break even, and I talked about my take profit. So yeah, just worth going over this one. But it's just it's good. It's a good example of like why you shouldn't worry about losses too much, because when you get it right, and to start with, you're going to get it wrong a lot. You're going to take a lot of trades. You're going to take a lot of losses. But as you get better, as you go through the losses and you figure out why you went wrong, and then you start to avoid the losses next time. As you go on, you start to avoid the losses. You'll slowly increase, and you'll realize that you can catch these better risk to reward trades, and these 1 hour losses don't matter at all when you can catch like 4, 5, even 8, 9, 10 hours, and to be honest with you, it's not unrealistic to catch a monster trade from these moves, because you understand the overall. Let's go to the 4 hour, because you understand, with experience. I'm not that good yet, to be honest, but now looking at it, because you understand that this is the target up here, it's risky, because price could just take this high and then come and take all this as liquidity. That could happen. But because you understand that this is the target, you could hold this. You could hold this up to here with a 7 pip stop, a 70R trade almost. You can hold that. You could do. Whether you would or not, it's unlikely. But it's you could do it. It's not impossible to get these big risk to reward trades. But yeah, you have to have that overall direction. Right. Anyway, I've gone off a little bit, but let's just quickly go over what I'm looking at this week. So we've just taken out external range liquidity of this monthly range. So I am going to be looking for shorts. I'm going to be looking for shorts because we've just taken out external. So now I'm looking for a new range to be created. A bearish range to come and target, to come and fill some of this. Because now we've taken external, we're going to come for internal. Now, I can't really go, yeah, I'm looking for shorts, but I can't really tell you where, because it hasn't set up yet. We go to the hourly time frame, we're still bullish. We have a strong low, we have a weak high, we've taken out all this internal liquidity, we've mitigated this block, and now we're pushing up to go and take this high again. So I don't know how it's going to set up. All I know is I'm looking to trade, I'm looking for shorts to come and fill some of this. And it makes sense now to look for shorts because we've taken external. So I'm not going to guess, but I will wait and see what price does, and if we go and take this high again, then great. We'll take this high again, and then I'll start to look for my bearish setups, and that is what I'll be waiting for. And yeah, I couldn't just do a video on that because it's not much of an analysis, but that's what I'm looking at. I'm looking at shorts to come and trade, take internal of some of this range. And what's internal? Well, what's internal? All of this is internal. All of this is internal. So that's my idea, and whether I catch a trade or not is irrelevant. But let's just see what happens. But I'm looking for shorts. I'm looking for shorts, whether we come and take this first or whether we come and take this out and then start to look for shorts. I don't know yet because it hasn't played out. This could just keep pushing bullish, then eventually give me the short setup, and that's what I'll take because that's my plan, external to internal. So yeah, not great analysis because I can't give you any areas, but who cares? You don't need to see it. All you need to know is that that's my idea, and yeah, that's what I'm going to take if it sets up. So hope you've all had a good weekend, and looking forward to another crazy week in the markets, but you know, it's been good. It's been good to watch, to be honest. You know, so I'm pleased this monthly range played out. I'm pleased with that. So now I know where I'm at. You know, now we've hit the target. I know where I'm going. I know what's probably more likely to happen. Is now we start to get that pullback. So I'm not going to go over GU. I'm just going to be looking at EU really. Yeah, I'm not even going to go over GJ, to be honest. It's just going to be a bit half-assed, so I'm just going to leave that. But my guess, is we push up, but that's just me without any proper analysis. But I'm thinking we push up. But anyway, that's it from me. I hope you know. I hope that was not too not too not too deep. But that is the way you should do it. You know, learn from your losses. If you don't learn from your losses, then all you're doing is wasting time. Because this, for me, has been the key to improving my trading, improving my entries, improving my bias, and I tried a lot of shit like with trading, and it got me nowhere. And it wasn't till I really put the work in and sort of understood the range cycle, but then also when I got it wrong, understood why I got it wrong. That really kind of helped me. So I'd recommend it to anybody to do it. But sorry if it's been a bit of a rant, but that's it from me. Have a good weekend. Bye bye.